Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday market webcast. Okay, so late last week we drew this box because it's been the box that we're living in. We ended up in and around the top of the box, which coincided with the highs from back on December 22nd. 39.1975 here, 39.2875 here. So a little bit of a higher high, actually closer to the 34 half high back on December 16th, which is right where we're trading now. So certainly the bulls have an opportunity here to try to lift this up towards 4,000 for a test of the 200-day exponential moving average. They've tested it, periodically. They've tried to convert it. The last time was right around mid-month, December, where they ripped it up to 41.80, and that was immediately rejected and brought back through, and we had like that really solid 300 handle move down on the mini. But you can see back here, it was tested here, it was tested back here. So going up to test it again is not the end of the world if you're a bear. It's just kind of what's next, and you need to continue to perform up there and continue to hold that area as resistance. Because, let's be honest, bears, you're doing a really shitty job of making lower lows and pressing the market back down towards where you want it. So those October lows are intact. You've got higher lows. You have a consolidation area that, you had a consolidation area here that you won, but you didn't do anything with it. It just turned into another consolidation area. Now, maybe that has a lot to do with the holidays. Maybe that has a lot to do with the new year. I don't know. Neither do you. And anybody that says they know, they're full of shit. You need to run away because they don't know. Nobody knows. So what I do know is we've been jammed in this little box now for like 10 going on 12, 13 sessions. And somebody's going to win this range. The side that wins this range has a chance to own, the next directional move. Whether that directional move is sustainable, probably not. We haven't had a sustainable directional move in months, whether it's been down or up. So we'll have to watch how 39.25 to 39.35 acts today. If you're the bulls, you want to close above that. Trading above it is one thing. So the overnight high is 38.5. That's nice. You gotta convert that area, and you gotta lift it to the upside, and you gotta stay there. And 39.50 is probably going to be a problem because it's been, every 50 has been a problem before. So there's no reason that you got to deal with 50. You got to deal with 77. Then you got to deal with the big round number 4,000, which is the 200-day exponential. So the bulls are, the work needs to begin now if you're the bulls. As far as the bears go, you need a little false breakout here that you can reject down and through, get back to the bottom of that range, potentially get down to the lower Bollinger Band there, which is, right around 37.60 to 37.70, depending on, where it's ticking at the time. And initiate another lower band ride that maybe you can do a little something more with than the last one. So the last one was right here. And then they gave it up. They grabbed it. This is where they really screwed up, because you had a lower low here, and you had the potential for a secondary band ride. It was just like, nope. And then they just, then the whole thing goes to sleep through the holiday. Hourly chart. It's just more of the same. You got this big consolidation level, right, that we've been talking about, and you can see they tried to take it down. They traded it as low as 38.19 off the jobs report Friday. Got into the regular session, little 38.29, but once it was able to convert the 38.75-ish area, it didn't really look back. It dealt nicely with the green line here, which is your middle Bollinger Band on the daily, the 20-day, and closed above it, and it stayed above it. So, bears, you got to get back below the 50. You let them test the 50 last night successfully off the Europe Open. You got the monthly up here. So there's stuff. But stop giving this up. Stop giving this up, And when it does this on successive days, you're going to have, a combination of what I think is very minimal buying, actual buying, and a lot of covering and a lot of weak shorts heading for the hills. Because if they put money to work anywhere inside that box on the daily chart, they're not green, they're red. So if you have any kind of risk responsibility whatsoever, you're going to cycle out of that stuff and you'll wait and you'll do something different. Because, that tranche of whatever didn't make you any money. You were looking for that box to break down to the downside. It didn't. It just, you can spin it any way you want. It just didn't. So as you get closer to this, as you get moves like this on Friday, it's like, nope, well, that didn't work. Okay, yeah, well, it held that. Well, that didn't work. I'm surprised we didn't push it a little higher, probably because it's 4 o'clock in the morning, off of the 50-day support. So if you're the bears, you got the 50 days sitting in there. You've got the hourly mid-band at 39.24. You certainly need to convert that. Volume weighted average price, 39.28. Our proprietary moving average, it just bounced off it. It's at 39.31 quarter. You get the 5-minute mid-band there around 32.5. So if you're the bears, it really starts, again, 39.25, converting that back through 39.20. Take out the Globex low, wind it back into 3,900 where this daily mid-band is. Try to close below it. You got the new weekly pivot down here, 38.85.67. The bears want to get back in this zone, but I think once you get back into it, bears, you're going to have to achieve. You want to be about 50 or 60 handles below where we are now, and you got a couple of days to get it done. Otherwise, you're just going to see this drifting directional pricing up into 4,000 because there's nothing else to do, and you'll see shorts back off. Again, you'll see light buying, a lot of profit taking as those shorts back off, and it'll just glide to the upside. So, and the rubber meets the road once again up at that 200-day exponential moving average. That's a big deal. That's a big deal, and that has been consistently a bridge too far for the bulls. All right, that's all I got. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Come check out the room. Come learn how to trade this stuff. Come learn how to manage risk, look at this stuff, and do it successfully on a consistent basis. That's all I got for you over there. So I hope to meet you. It's a great group of people. Come and join up. All right. Take care. Be well. Trade them well. See you tomorrow.